Right. So we have NASDAQ daily chart on the left-hand side. And obviously it just keeps powering higher as I indicated this week it would. The right-hand side is a 1-minute chart of NASDAQ. Again, this is the December contract for 2025, NASDAQ E-mini, not the micro, it's the mini. All right, so the first thing we want to take a look at here is that small little volume imbalance there. So where we opened up today, while trading was going on, it was already up in here. It still had a volume imbalance there. And this drop down was overnight in the London session. And we came up into here, and then we came back down in and rallied back up into the latter portion of the day. And we'll look at that price action now. All right, so we have a premium wick here. Again, grading those wicks. So we have the close of this candlestick here, the lower quadrant, consequent encroachment halfway point, upper quadrant, and the high. Okay, so this is Thursday's premium wick graded. So we are our quadrant levels on it, and then they appear over here on the left-hand side. So if you look at the intraday 1-minute chart, you can see how price ran right up into that, swept it by a little bit. That's classic. And then we have a market breakdown, and we'll look at this wick here, and we'll talk about market structure shifts and the valid ones and what's not. But I mentioned on Twitter this morning that 24,735 I felt was suspect. Okay, and the reason why is obviously it's pre-session sell-side liquidity. This gap in here is first presented fair value gap. And we rally up and we draw right back down into it again. So it created it here, failure to launch, didn't take out that high, trades back down in, the bodies stay inside of the first presented fair value gap, rallies, hits the high over here. So it hits it here. Then breaks lower. This is not a market structure shift because it's a wick inside of a buy side valve, sell side inefficiency. So there's two PD arrays that are going to conflict. We don't want to look at that as a market structure shift. So it trades back up. Yes, this fair value gap, you could have went short there. I'm not trying to do that. Market breaks lower again here. And notice it's just finding sensitivity right at that fair value gap's low point. That was not meaningful. Didn't close, didn't have a body down there. So it just touched it. Rally back once more. Here's another fair value gap in here. You could take that short. There's nothing wrong with that short. For you, I'm not taking that short. And then we had the market break lower, trade back down into the first potential fair value gap. Look at the bodies. The wick trades down into it, but it doesn't breach it to the downside. Rallies once more into, and trades up into that fair value gap there, which we continue through, which makes this what? A reclaimed bearish fair value gap. Now this imbalance in here, we want to see it break through that. And around here, consequent encroachment's trading there. And if you look real small, fair value gap in that little area as well. So these are all things that were pertinent to this. And if you watch the trade that I uploaded today on YouTube, I didn't remember to put the trade execution video in last night's upload, but I did since then add it. Okay, but I have to make a note to make sure I put this one in the comment section so that way you can see it for those that aren't aware of what I'm talking about here. All these things were outlined in real time, and the market trades lower. It trades back down into the first potential fair value gap, and notice it was here and here. It was sensitive, but now we're back into it again. A third time is not a charm. Okay, it's gonna break through, and targeted in that sell side on that low and these relative equal lows here. So reaching for pre-market session sell side liquidity, and we get there. Now I showed in the trade example how when you get overzealous, by taking your target, what you first end up with here, that's pre-market session sell side liquidity pool. You want to take that when you're in a primary bullish market. You want to take that like a tick or two above or right at it, and worst case scenario, maybe one tick below it, because you can get these very fickle type reverses like this. when it's an underlyingly bullish market. Now, when it's a bearish market, and you can extend those targets and try to reach for a little bit more, try to get a little bit more cream out of it. Well, I showed the case that today, and you saw that it was unwilling to get to my overzealous target, so I had to take off 2 of them. Here's the example of the executions. Okay, you can see 24,798 right up in here. That's at the high end of the reclaimed fair value gap. And I added one more right at the upper quadrant level. So look at that price, 24,790.50. Fill, 24,790.50, as you would expect from ICT. And then the market breaks lower and trades right back up into here. Could have added into this and broke lower. Immediate rebounds in here, just delicious on the downside, breaking lower, touched the consequent encroachment here, breaks and delivers right below 24,735. Then it has this kind of gnarly retracement in here, and then ultimately comes back down and does a much more meaningful slide lower, which is, it's part of the game when you're trading short when it's primarily bullish. But if the setup's there, folks, take it. When you have a little bit more experience, and I think I probably have a little bit more experience with ICT concepts than the next guy, so I'm going to take them. And I'm going to show you, what it looks like when you're doing it. Now, later on in the afternoon, had I been in front of the charts, I would have been all over this bad boy, this little section of price action at volume imbalance, because we in fact traded back into that. So I'm extending the first potential fair value gap over here into the afternoon. Here's where the entry short was, and then my fill, and then finally getting stopped out on the last 2 because I trailed the stop loss to halfway point or consequent encroachment of the first potential fair value gap. That little gnarly retracement in here. Then it broke lower and then traded right down into that volume imbalance on the daily chart. I mean, look how beautiful that is. That's this right here. So we were up here, then came all the way back down intraday to there. Then right back up. That's exactly what I explained on Tuesday's first lecture this week. Go back and listen to that again. This is exactly what I told you it would do. The market rallies up. Look at this crazy rally back up. They're not letting anybody get on board with that. This is your only opportunity here. First potential fair value gap at the consequent encroachment, the bodies are respecting, and then sends it higher, right up in here to take out that high. So scrubbing this over again, seeing everything a little bit better, crunched and compressed. Today's initial high, and then the black line is Thursday's daily high. That's this right here. Okay. It runs that liquidity out, and we have that liquidity being taken here. And ultimately, it just keeps on powering higher, almost to 24,900. So that was actually a pretty impressive rally off that in the afternoon. But again, this is why you do not try to pick tops at all-time highs, and look for reasons to use that daily chart as I taught you over here. They're going to come back to those imbalances, the volume imbalance, the fair value gap, and inside these wicks. If you don't look at this stuff, it's going to completely go right past you, and you'll never know it as an opportunity. All right, quickly into forex. Here's the dollar index, and I've mentioned that if this starts to rally up, I want to see this act as an inversion fair value gap, and I graded that as well. And there's a volume imbalance right there. So with these levels here on the daily chart transposed over to the 5-minute chart, you can see how we dropped down at midnight right at the upper quadrant level of that inversion fair value gap. Rallies, comes right back down into a fair value gap and bullish breaker. See that? Hits there, rallies, and just keeps powering up into that daily volume imbalance. And then once it gets there, randomly, it just sells off and it moves into consolidation. So this is kind of a little bit of a tricky area to be trading dollar index. Not that I recommend trading dollar. I've never traded dollar index. It's simply a barometer to tell me if currencies should be bullish or bearish, and if it's risk on, risk off for all assets. Okay, switch up a little bit here. So pound dollar, this is cable. This is actually one of my favorite forex pairs to trade. And I traded this when I was a commodity trader, trading the pound futures. The buy side imbalance, sell side inefficiency here, I graded that as well. And the market starts to sell off as we expected with the euro to continue lower. The Pound did the same thing. So dollar was going higher. It moved above that range I told you I wanted to see, and it would treat that inversion fair value gap as a discount array. We've seen that. And then the market breaks lower and trades right back into this fair value gap. This discount wick, this is for your notes, okay? This is both forex and commodities and futures and whatever else you want to trade, okay? If we open where we close, listen to what I'm saying. On the daily chart, if we open where we closed and we have a discount wick and we're bearish, you want to grade that discount wick, because you're going to be able to use that in the first 30 minutes to an hour of trading, and it'll be very sensitive to these levels. Here we can see we have true day start, which is midnight Eastern time. If you don't know what that is, go and look at my 2016, 2017 paid mentorship content that I uploaded right to my YouTube channel. There's yahoos out there trying to get you to pay for that stuff. It's all for free on my YouTube channel. All you have to do is go into the playlist and you'll see I have it broken up into every individual month. And incidentally, also, people keep emailing me asking me for the PDF files. The PDF files on the 2016, 2017 mentorship, the only thing that was the slides that you see in the video. So if you want that PDF, just screenshot every slide when I make a change, because that's all that ever was. There was no additional notes. It was just for them to have something to scribble on and extra notes, because there's lots of places on there where they could add it. Kind of like what I'm doing with here, okay? But they didn't get this. This is something new for public distribution. All right, so Asian session, buy side liquidity. The market trades up into that, sweeps it, breaks lower, and then comes right back up into a fair value gap. This in here, breakaway during London open kill zone. Now, when I trade forex, I'm looking at 1 a.m. to 5 a.m. That's my entire universe of London trading. So I always make allowance for daylight savings time and all kinds of times forward that may come around that. So here's what I look at. If you ever want to know what's the actual times that Michael would have on his chart, it's 1 a.m. Eastern time to 5 a.m. Anywhere in there, I'm looking for a setup, okay? So here we get that setup here. It breaks lower. Look at the body's respect and consequent encroachment of that wick over here. Dives into just short of the fair value gap high here. And then we go into what? New York open kill zone, 7 a.m. Market breaks down a little bit, comes right back up to a bearish fair value gap, and then tanks right into lower quadrant of the fair value gap over here on the daily chart for pound dollar. Really, really nice little setups in here. This is just a dandy of a move on the London side, and continuation in New York, as you might expect, digging into a discount array derived from the daily chart.